Good afternoon, good morning, good evening, whatever time it is where you're joining me from. Thanks for coming back to Dan's Trades. As always, please read all the disclaimers. None of this is financial advice, purely for entertainment and/or educational purposes only. Today is the day after Election Day. It is 11/6/2024. Current time right now is 3:09 p.m. New York time, 2:09 p.m. Central time where I am. Just going to take a look at a trade I took. Yes, this is my paper trade account. I scalped a couple this morning, ultra scalps, an hour after the open. I'll cover that maybe. We'll see if I have time. But took a trade in the PM. Looking at this 2-minute chart here, I'm testing a new layout. And maybe before I dig into all this, but I'm going to play the recording. So let me get that keyed up here. Alright, so here's the video player keyed up. It's the raw footage from earlier today. We see at that time it was just before 2 o'clock, 1 o'clock Central Time, down there in the bottom. And to set this up, this is an 8 grid on a screen. 1 second chart, 5 second chart, 10 second chart, 15 second chart, 30, 45, 1 minute, and 2 minute. Coming into the 2 o'clock macro. So as fast as I get Camtasia started, my entry did trigger, which was based off of what I initially saw. So this is what's interesting. I'm just going to let this play for a little bit. So right now it's 159.09 it looks like. I'll click play. So we had swept down here, set the stop based on previous. So I didn't actually capture what I framed this on. It was on a 15. Maybe I can see it here if I move around enough. But let me stop moving the mouse. Targeting the top side of that 2-minute chart up there. Equal highs after we had just swept liquidity. Let me pause it right here for a second. So to kind of set it up here, no, this is without any daily bias whatsoever. Strictly just watching these charts and watching the ultra low time frame. Not saying you have to do this, but it's just something interesting that I just tested and I find fascinating. So had the entry set at 854, you can see target set at 875, and the target's based on, I was seeing relative equal highs form up here on the 45-second chart. I was respecting what's most likely a rejection block on a 45-second chart. Time is fractal, so it doesn't matter. This scales from high to low. This is the ultra low option. This is 1 micro contract on the MNQ. Purely scalping for right there. So you can see the micro structures. I mean, you can see that this is the buy side of a market maker buy model curve. You can see even on the higher time, or excuse me, a higher time frame to that. Look at this setup. Look at this setup. Look at this setup. The stop. So the higher time frame, relatively speaking, 30-second is a higher time frame to a 1 second. Keying off of these relative equal highs. They were just staring at me. On the 1-minute chart, it was obvious. Price had just swept. We had tapped into a 1-minute fair value gap right here. And price reacted to it on that 1-minute chart. But we had left that, so we had just disrupted, took out all this sell side liquidity anyone's placing on a 2-minute chart, because there's always buys and sells happening. Price is fractal. So we just swept all those, engaged this inefficiency, which also had a high in it. That might be important. So basically this is an IO-Fed entry, if I were to get that, but I didn't get that. I saw that happen down here on the ultra low time frames. So that's back before here. But that's fine. So this is all keying together. So this is the highest time frame we're looking at here. This is the lowest time frame. So we can see these signatures and price happening. And I set it according to that. I think it was a 15-second fair value gap. Right there. So that's why then the stop was placed below this volume imbalance. We have a balanced price range below here. Prices delivered down, prices delivered up. We have bodies, bodies. So on the ultra low time frame, 15-second chart, it's a tiny little balanced price range. So that was why that was set accordingly. So 15-second volume imbalance. Can't even see it. Oh, you can see it. It's 30-second as well. So there we go. It was a 30-second. I placed underneath that low on a 30-second chart. Put the stop below that volume imbalance. This was my entry on a 30-second chart. It was right there. So then Camtasia started 30 seconds later just now. And now we're painting this 30-second chart. So that was the setup for it. And targeting, again, those equal highs. 85 ticks away, stops at 19 ticks. I'll take that. Let's continue the video. I'm watching, paying close attention on the ultra low time frames, 1 and 5 second. And I'm seeing these play out. So once I know the 10-second chart's going to get up there, it's targeting that swing high from a 10-second perspective. And just watching all of it at the same time. And we are inside. So now it's 2 o'clock. There's a turnover, so we have a new hourly candle forming. I'm expecting a little bit of a pullback because I wanted to see it open and make a tiny wick low. You can see up here on the 1 minute chart, we opened. We're pulling back into 50% retracement of this candle. Expected. The stop is below it. And I'm expecting to run on these two relative equal highs right there, because we had just disrupted and engaged liquidity right there. And now we're going for the relative equal highs inside of macro in the PM after the crazy morning session after election day, the day before FOMC. Interest rate coming out tomorrow. I think it's expected to be lower. The data doesn't matter, just the time of day matters. So this is why I'm doing an ultra scalp on these super low time frames, because you can get in and out and expect a price run on this type of price fractal. Not touching the stop. It's going off the screens at the bottom here, so I'm not even looking down here anymore because we're off the screen. Now I'm looking at up here. I'm looking at the 15-second chart, 30-second chart, where definitely price is moving up where we want it to go. Adjust the stop below that swing right there is where I put the stop, because we have traveled more than 75% of the way to the terminus of this trade. So stop is placed right below there. And then watching this exit is beautiful on a 1 second chart. On a 1 second basis, all those orders were stopped. Look at all that selling pressure coming in. Watch this. A tick away and it pulls back. And then it pulls back again. You're telling me that that's random buying and selling? Are you kidding me? Look at that. Oh, but now so that must be a really high resistance area. People should go short, right? Yeah, let's get the short guys in there. Put their stop above that. That'd be a great idea, right? That's such a high resistance zone. Oh, maybe not. So, that's the end of that video. Let me pause here. Alright, so now we're back in the live chart, and this is that area where we saw that trade happen. I will put on the executions. I'll put on all the charts. So this looks like noise, right? 2 minute chart, 1 minute chart. How the hell can you do that, right? Isn't that just the chop is real? I mean, we got 850 to 875. These are 25-point swings. And I nailed that top and took an entry right there. I mean, yeah, it went higher. That's fine and dandy, but I mean, look at this. So here is the 10-second chart. And I did all this naked. No indicators. Yes, I do have higher time frame annotations on my other charts, but I took this, watching this, naked. I'm not trying to brag. I'm just saying you will get there. This stood out to me like a sore thumb. Look at this. Look at these highs. Look at, you tell me that that price is going higher, right? But it wasn't ready for it yet. So consolidation happens after we had run up. 10-second chart. You see all this, literally it's like it ran into a brick wall. Price closed once up here, never again, just sitting here at 875. And then it rips down 20 points, down to 850. So then we see this, okay, we're definitely engaged in this liquidity. So on a 10-second chart, that's tapping into right there. So on that 10-second chart, we can draw in, let's see, that's before I draw anything in, there is an annotation here on a higher time frame that does come into play, which I didn't even see until I started looking at this after the fact. So here's the IL-Fed entry that we saw on that higher time frame chart, right? Right here's the stab down, right there. So that just happened. That took out these lows, engaged all this sell side liquidity. Price ran up on a small retracement is where I entered. So I saw this happen on an ultra low time frame. Then I placed the orders, and then I hit Camtasia to record as quick as I could. I'm really glad I did too, because this is kind of blowing my mind, even just on the review. Even though I know all these things, just seeing it happen is ridiculous. Okay, so there's the buy and the sell in the 1-second chart, but here's where it's framed, and I'll unhide the annotations. This is a higher time frame volume imbalance on a daily chart, I believe. So on a 2-minute chart, we'd stabbed into it, and then the trade came. So this is what I was seeing coming up into the macro. Here's the 150 macro started. I'll maximize this. So macro's right here. Got long on that one, got out on that one, and what looked like noise on a 1-second chart. So that's way up in the 2-minute, way up. How funny does that sound? 1-minute view inside the macro. The price engine will seek liquidity, and you think the chop is real, but how am I able to time? I mean, over here it looks like I'm early, right? Because went into all this drawdown of 7 points, 6 points, with an 18 tick stop that we saw in the video, whatever that was, 19. So stop was down here, below that volume imbalance, and I didn't care. I knew it wasn't going there, or I didn't know it, but it worked. That was based on the setup, and I didn't even see this volume imbalance till after. So that's the key point. So next I'm looking at, so here's what I was seeing. Now I can draw is this fair value gap. Huh. Make that bigger. So 10-second chart, tiny volume imbalance. Technically that should be included. but the bottom side doesn't matter. It mattered for my stop. But look, there's the entry. And the exit, which was targeting these swing highs, or these relative equal highs, excuse me, 875.50. Huh, bodies, 875.50. Even with this, so here's that. Interesting, right? Just stopped, and then it pulled back, and it came down for a second helping. Actually, this was a beautiful market maker sell model on a 10-second chart, because this took out this original starting point, but it didn't come all the way down to this one, but that's fine. And it ripped right back up later. But the macro ends here. So I want to take a trade inside that macro. And I don't think I can get much better than that. I mean, I could have pyramided right here, but that's fine. That's for later. I did see that happen. So when you look at this on the 10-second chart, let me drop this back down. I did see that happen right here on a 1-second chart. It makes it a lot more easily viable when you can say, look at these volume imbalances, look at these little clusterings. Doesn't surprise me that this fair value gap was revisited with this tiny retracement on a 1-second chart and how that looks comparatively speaking. So yeah, that's an easy pyramid because you can see all of it happening, right? Once you understand this and when, wow, it'll blow your mind. So I'll just turn this on for all of them so you can see them. There it is. It's all the different time frames, right? So then it's running away from you. You know, it's a good key for me. It was, so it looks like I got in early on the 1-second chart. Ultra perfection would have been here, but I mean, I'll take that. Couple points, couple ticks. Perfection would have been after this stab, but it didn't even fill in this fair value gap, so that's even another sign of bullishness, where it didn't fill in the 10-second fair value gap on a 1-second chart, and it broke above, came back down and tapped it again. So this could have been the perfection entry based on, but it's still the same entry, so who cares if it's on this side or that side? I get it. It could have kept going down. Anything could have, would have, should have, then I would have been stopped out right there. If it would have been down and taken out this fair value gap, or excuse me, this volume imbalance, and went the other way, fine. Then I'm stopped out for 19 ticks. I'm perfectly fine with that. But look at everything else that lined up that said it wasn't going to do that on the ultra low time frame charts, and then seeing it up higher. There's the first helping. Here's the second helping. Here's a pyramid for the second helping, and it still ran up and hit it. But it was outside of the macro, so I'm keeping my rules inside the macro. Just a glance at ridiculousness and using limit orders on a 8-screen panel. Very interesting. I think I'll cut her out there. Thanks for coming for the ride, and look for more stuff coming. Appreciate you guys. Remember, tomorrow is promised for none of us. Live for today. Take care.